Okay, so you ready to dive into the world of real estate?
I was listening to this podcast, Margin World, and their episode on real estate for beginners, like, blew my mind.
I'm talking practical tips,
Yeah.
clear explanations, the whole shebang.
Yeah.
It's like they took all the intimidation out of real estate investing, and I knew we had to share it.
With you.
Of course.
So think of this deep dive as like your crash course in real estate investing 101.
We're taking the gold from Margin World and like boiling it down to the need-to-know basics.
Love it.
So Margin World starts off strong.
Answering the big question, why invest in real estate in the first place?
Right.
They highlight two major advantages.
Tangibility and leverage.
Now, tangibility really clicked with me.
They talk about how unlike stocks or bonds, which can feel kind of abstract,
Yeah.
real estate is something you can see and touch.
Right.
You can even improve it,
Mm,
which gives you a sense of control over your investment.
for sure.
It's like the difference between owning stock in a company that builds houses
Okay.
and actually owning a house itself.
Okay.
With real estate,
Yeah.
you have the power to make decisions. Renovate?
Right.
Maybe even build that she shed you've always dreamed of.
Yes.
But then there's leverage.
And this is where things get really interesting.
Okay.
Margin World explains it simply.
It's using borrowed money like a mortgage
Okay.
to potentially supercharge your returns.
Mm-hmm.
Imagine you buy a $300,000 property,
But only put down a 20% down payment.
which is $60,000 of your own money.
Okay.
Let's say the property value increases by a modest 10%
That's a $30,000 gain.
on your initial $60,000 investment.
That's a 50% return. And that, my friend, is the magic of leverage.
I like it.
Okay, I'm sold on leverage.
So we've established that real estate can be a pretty sweet deal,
Right.
but there's so many ways to invest in it.
Yeah.
Where do we even begin?
So Margin World outlines 6 main categories
But for today, let's streamline it.
and focus on the 2 that are most approachable for beginners.
Okay, love it.
First up, residential real estate.
Think houses, condos, maybe a duplex.
Okay.
This is where most people dip their toes in because it's familiar territory.
It's like the classic example of buying a house and renting it out.
Precisely.
Right.
And Margin World points out that in the U.S., 30-year mortgages make it even more accessible.
Allowing you to jump in without needing a huge chunk of cash up front.
Right.
Of course, the trade-off is you'll likely pay more in interest over the life of the loan.
Good point. It's all about weighing the pros and cons,
Now, what about those folks who like the idea of real estate investing?
but aren't quite ready to become landlords.
Sure.
Margin World had a suggestion for that too, right?
They did.
They suggest looking into REITs.
Real estate investment trusts.
Okay.
Think of them like a more hands-off way to invest in real estate.
Okay. How do REITs work?
Essentially, you're buying shares of a company that owns and manages a bunch of different properties.
Office buildings, apartments, shopping centers, you name it.
So instead of owning physical property yourself, you're investing in a company that does.
So it's kind of like buying stock.
But with a real estate twist.
Exact.
And just like stocks, REITs offer built-in diversification.
Since these companies typically own a variety of properties in different locations.
Right.
Plus, they often pay dividends.
Which can be a nice bonus on top of any potential increase in the REIT's share price.
So we've covered why real estate is so compelling.
And dipped our toes into the different types of investments. Now let's explore the exciting world of the real estate market itself.
Where that famous mantra, location, 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 takes center stage.
Right. Right? It's so true, though.
That mantra is like the golden rule of real estate for a reason.
It's all about finding those hidden gems in up-and-coming areas.
Right.
Like buying a charming fixer-upper.
In a neighborhood that's about to boom.
Yeah. It's not quite as simple as playing a game of real estate roulette.
True. That's probably a tad more complicated than that.
Right.
Margin World really emphasizes that location is about understanding.
The dynamics of a specific market. They give examples like San Francisco,
New York.
London cities, known for their sky-high property values,
Right.
but it doesn't have to be a global metropolis.
What matters is the balance of supply and demand in that particular area.
Okay, so it's like that economics 101 principle we all learned
Yes.
and probably forgot.
Exactly.
Remind us how supply and demand works in the world of real estate.
It's actually very intuitive.
Think of it like concert tickets
Okay.
for your favorite band.
Yeah.
If there are far more people who want to see them,
Then there are tickets available.
right.
What happens to the
Yeah,
price?
it goes through the roof.
Oh.
People start paying ridiculous amounts because the demand is so high
Yeah.
and the supply is limited.
Exactly the same principle applies to housing.
Okay.
If an area has limited housing options,
But everyone wants to live there.
high demand, low supply,
Right.
property prices shoot up.
Yeah.
But if there's an overabundance of properties,
And not enough interested buyers.
okay,
Low demand, high supply. Prices tend to stagnate or even drop.
though finding that sweet spot where demand outpaces supply is key.
Yeah.
But let's be real.
Most of us aren't swimming in cash when we start thinking about buying property.
Okay.
How do we even finance our real estate investment?
Right.
You're telling me it's not like they show in the movies?
Where we just casually stroll in with a briefcase full of cash?
Right. We need to talk mortgages and loans.
Sure.
Thankfully, Margin World walked through the different financing options.
And made it seem much less daunting than I expected.
Good.
They do a good job explaining traditional mortgages.
Which are still the most common route, especially in the U.S.
Okay.
Basically, you make a down payment.
A percentage of the purchase price upfront
Mm-hmm.
and borrow the rest from a lender.
And this is where our credit score comes in, right?
Absolutely. Margin World emphasizes
How crucial your credit score is,
a good credit score unlocks those favorable interest rates,
right?
which can potentially save you thousands of dollars over the life of your mortgage.
Oh, yeah.
It's like getting a secret discount on your investment property.
It's amazing how much those interest rates can impact things.
Absolutely. And for first-time homebuyers in the U.S.
Margin World highlighted FHA loans as a potentially helpful option.
Okay.
These loans, backed by the Federal Housing Administration,
Are designed to make homeownership more attainable.
often with lower down payment requirements than conventional mortgages,
That's so helpful for those just starting out.
who might not have a huge down payment saved up.
Right.
But Margin World makes sure to mention that
While using leverage
borrowing money to invest,
can be incredibly powerful.
it's not without its downsides.
Sure.
They brought up the point that if you're fortunate enough to be able to purchase a property with cash,
Right.
you avoid those interest payments altogether,
Yeah.
you might even have more negotiating power with the seller.
But realistically, that's not an option for most people.
Yeah.
Especially when starting out.
All right, so we've tackled the why behind real estate investing,
Explored the different types of investments.
dipped our toes into the real estate market dynamics,
Yeah.
and even demystified financing.
Now comes the part that always makes me a little anxious.
Okay.
Calculating returns.
Right.
It could definitely seem intimidating.
Yeah.
But remember how Margin World kept things clear and straightforward?
Hmm.
They do the same here.
Focusing on the two primary ways you make money in real estate.
Okay.
Cash flow.
And appreciation.
Okay, so break those down for us.
Okay.
Let's start with cash flow
What exactly does that mean?
in the context of real estate.
Cash flow is the money your property generates.
After you've covered all your expenses,
Okay.
let's say you're renting out that charming fixer-upper we talked about earlier.
You'd take the monthly rent coming in
Right.
and then subtract things like your mortgage payment
Property taxes,
and
any maintenance costs.
right.
And hopefully there's some money left over at the end of that equation.
Right.
Exactly.
That's your cash flow.
Right.
The money you're putting in your pocket each month.
So positive cash flow. Good.
Yes.
Negative cash flow, not so much.
Precisely. Now on to appreciation.
Okay.
This is where that location mantra comes back into play.
Okay.
Appreciation is the increase in your property's value over time.
So if we buy that fixer-upper in an up-and-coming neighborhood,
Right.
fix it up all nice.
And the neighborhood suddenly becomes the place to live,
Yeah.
then you're sitting on a property that's worth significantly more than what you paid for it.
Sweet. So if I bought that house 5 years ago for, say, $250,000,
And today, thanks to our brilliant renovations and the neighborhood's newfound popularity,
it's worth $400,000.
okay,
That's a pretty awesome return.
you'd be sitting on $150,000 of pure appreciation. Wow.
Of course, you only realize that profit if and when you decide to sell.
Right. It's not like finding cash hidden in the attic.
Right.
But Margin World made an important point about return on investment.
Right.
It's not just about potential profit.
Right.
They're all about taking a holistic view.
Okay.
They emphasize that ROI also includes the time and effort you invest in the property.
Okay.
Think about the time spent managing tenants,
Right.
dealing with repairs,
Right.
maybe even putting in some sweat equity with those renovations.
That's a really good point. It's easy to get caught up in the dollar signs.
But time is money too.
Exactly.
It all factors into the overall picture of how profitable an investment truly is.
Okay.
And speaking of the bigger picture,
We can't talk about investing without discussing risk.
Real estate has its fair share of potential downsides.
You're right. Things like unexpected repairs,
Difficult tenants.
even changes in the market
Yeah.
can throw a wrench in your plans.
And let's be honest, that can feel kind of scary.
Absolutely. But remember, Margin World is all about empowering us.
With knowledge.
Right.
They dedicated a good portion of their episode to risk management.
And they had some really solid advice that resonated with me.
Me too. They didn't sugarcoat it. They acknowledged the risks,
Right.
but also reminded us that knowledge and preparation are our best lines of defense.
Right.
What were some of the key takeaways they emphasized?
They highlighted 3 things that are especially crucial for beginners:
Okay.
diversification
Market research.
and having an exit strategy in place.
Okay. Both of those are 3 words you hear a lot in the investing world.
Diversification, market research, exit strategy.
Right.
But how do they actually play out in real estate?
So let's start with diversification.
Okay.
It's the classic, don't put all your eggs in one basket idea.
Right.
In real estate, that might mean investing in a mix of properties,
Okay.
like a rental house and a commercial space.
Or maybe exploring different neighborhoods with varying price points.
So if one investment isn't performing as well as you'd hoped,
The others can help balance things out.
right,
It's all about spreading the risk, right?
exactly.
And then there's market research.
Margin World could not stress this one enough.
Right.
They said it's like doing your homework.
Before you even think about buying.
Yeah.
It's like, yeah, that charming fixer-upper is cute.
But what's the average rent for similar properties in that neighborhood? What's the vacancy rate like?
Mm-hmm.
Are those property taxes about to skyrocket?
Yes, all excellent questions.
And don't forget about those broader economic factors we touched upon earlier.
Right.
Job growth.
Population trends.
Right.
Even things like new infrastructure projects.
Those can all impact the value of your investment down the line.
It's about looking beyond the surface and really understanding the forces at play.
In that specific market.
So it's not just about finding a property you love.
It's about finding a property that makes financial sense in the long run.
Exactly.
And that brings us to the last point.
Okay.
Having an exit strategy.
Okay.
I'll admit, this one always makes me a tad nervous.
Like we're plotting a getaway or something.
Right.
It's not quite as dramatic as that.
It's really about having a plan for what happens down the road. Do you envision holding on to this property for decades?
Right.
Maybe even passing it down to your kids?
Okay.
Or is the goal to sell it in 5 to 10 years?
Hopefully for a nice profit.
Right. It's like choosing your own adventure.
But for real estate.
Exactly.
And having that long-term vision guides your decisions along the way.
Right.
It influences everything from the type of property you choose.
To the renovations you make.
Okay.
Like Margin World said.
It's the mark of a savvy investor.
Thinking ahead.
And anticipating those future moves.
It's about being prepared, not scared.
Which is a message I can get behind.
Right.
This whole deep dive has been a whirlwind of insights.
I feel like I've graduated from real estate newbie to,
Well, maybe not a mogul just yet.
but definitely more informed and empowered.
Good.
Speaking of action.
Margin World left their listeners with a question
Okay.
that's been swirling around in my head ever since.
And I want to throw it out to you, dear listener.
Okay.
They talked about real estate often being seen as a hedge against inflation,
Which got me thinking.
with all the economic twists and turns happening globally right now.
Does that still hold true?
Okay.
And if so, how does it impact your own approach to real estate investing?
Right.
It's definitely something to ponder.
As you continue on your real estate journey.
Yes.
And hey, who knows?
Maybe it'll spark your next deep dive.
There you go.
Until next time, happy investing.